Hello, financial enthusiasts. Today we're diving into the exciting world of digital currency and more specifically the digital pound. If you haven't heard of yet, you're in for a treat. The Bank of England, the lead of monetary policy in the UK, is exploring the idea of creating a digital version of the pound. That's right, a digital currency that could revolutionize the way we make payments. Here's the exciting part. This change could be introduced sooner than you expect. But why are they doing this and what could it mean for us? I read the Bank of England publicly available Consultation report, available on the Bank of England's website, so you don't have to. The digital pound, a new form of money for households and business from February 2023. So what exactly is the problem? Think about the way you use money for the past 5, 10, or even 20 years. It changed a lot, right? Cards have been replacing cash payments at very fast, less 15 million cash payments compared 2021 with 2012. To be honest, I even don't remember the last time I made a cash payment. This is due to new payment technologies, for example, embedded finance, blockchain, smart contracts, DeFi, which are disrupting the way we see and use money. But there is also another problem, the rise of unbacked crypto assets such as Bitcoin and Ethereum, which presents a problem that the digital pound aims to address. These crypto assets are decentralized, highly volatile, unbacked and speculative, lacking of a safe and stable store of value or reliable unit of account. Their value really is dependent on what someone is willing to pay for them, and there is a low acceptance as a form of payment. So what is really the solution? The Bank of England is proposing the digital pound, central bank digital currency, or how they call it CBDC. The digital pound aims to offer a stable, safe and widely accepted form of digital currency that addresses these issues. A digital pound created by the UK Central Bank would be a new type of digital money for people and business to use for everyday payments. It would exist alongside cash, not replace it, and would act as a digital version of banknotes and coins with strong privacy and data protection. The digital pound would help keep central bank money relevant and increasingly in the digital world, supporting the UK's financial monetary stability. It could also encourage innovation in private sector, offering more choices and better payment options. So how does the model of digital pound work? Here is a brief overview of the key aspects proposed in the digital pound model. First, it would be a publicly-private partnership. The digital pound system will be based on the collaboration between the Bank of England and the private sector companies. The Bank of England will operate the central platform, while the private sector companies will offer wallet service and other forms of innovations. Central platform. The Bank of England will operate the central platform that issues the digital pound and manage transactions. This ensures the stability and security of the digital currency. Wallets to hold digital pounds will be provided by private sector companies known as payment interface providers, PIP. Users can choose from a range of wallet services with varying levels of identification and private preferences. Privacy. The digital pound would offer privacy protections similar to cards and bank accounts. It will not be anonymous, but the Bank of England and the government will not have access to users' personal data, except in limited circumstances required by law. Accessibility. The digital pound will be accessible to both UK and non-UK residents and can be used by households and business for various transactions. Exchangeability. Digital pounds will be seamless exchangeable within the forms of money, including cash and bank deposits. In terms of user access, users can access their digital pound wallets through smartphones or card, making it convenient for everyday use. And there's not going to be any interest. The digital pound will not pay any interest, at least initially, as it's intended for everyday transactions rather than savings. The Bank of England proposes places limited on holdings of digital pounds during the introductory period, with an individual limit between 5,000 to 20,000. This is aimed at managing risk to financial and monetary stability while ensuring that the digital pound remains widely usable for retail purposes. The main risks stem from large and rapid outflows from bank deposits into digital pounds and the potential disruption of critical money markets due to wholesale use. Everyday payment. The digital pound is designed for everyday payments both online and in store, making it versatile and convenient form of currency. How would it work in practice? Here in this diagram presented by the Bank of England in the consultation paper on digital pound illustrates how users will interact with the intermediaries known as payment interface providers or PIPs rather directly than with the Bank of England. In the diagram, the following components are presented. The user, the individual or entity using the digital pound for transactions. A payment interface provider, PIP, a private sector company that offers wallet services for the digital pound. The user interacts with PIP, which manages the user's wallet and processes transactions on their behalf. PIP Anonymization Service. The PIP will anonymize users' personal data before sharing any information with the Bank of England. This ensures that the bank only receives anonymized transaction data, protecting users and privacy. Bank of England. The central bank operates and maintains the core ledger of the digital pound, ensuring the stability and security of the system. It does not have access to users' personal data. Anonymized transaction data. The Bank of England receives anonymized transaction data from the PIPs. This data provides an overview of total transactions, such as volumes and values, but does not include any personal information about the users. So what are the benefits and challenges? A digital pound would make payments faster, cheaper, and more secure. It would also provide a way to make payments in different forms as technology develops. It would also be more accessible to everyone regardless of their location or financial status. This will also allow uniformity, risk-free public money, trust in money and in the financial system, with positive impact in the monetary and financial. But there are also some challenges to consider. The Bank of England needs to ensure that the digital pound is safe, reliable, and doesn't pose any risk to financial stability or privacy. They also need to figure out how it would fit into the wider economy and the regulatory landscape. For example, the introduction of new forms of digital money, such as the digital pound and stablecoins, could adversely impact banks' business models and affect the costs and availability of credit. The digital pound may lead to households and businesses switching some of their bank deposits to digital pounds, resulting in a loss of deposits for commercial banks. This process is known as bank determination, and depending on its speed and scale, could have implications for financial stability. When banks lose deposits, they may replace them by borrowing in wholesale funding markets to maintain the same level of lending. If the wholesale funding is more costly than deposits, banks might pass their cost on their lending by increasing the price of credit to households and business, or reducing the quantity of credit they are willing to supply, or even both. This could lead to higher borrowing costs for consumers and business, as well as potential reduction of the overall availability of credit in the market. Will this impact inequalities? The introduction of digital pound can increase inequalities. Cash continues to be crucial for many, with around 1.2 billion UK adults not having a bank account, and approximately 1/5 of the population preferring cash as their payment method. This highlights the importance of cash across various social groups. Even those who don't regularly use it consider cash as an essential backup payment option. To address this, UK authorities are committed to ensuring ongoing access to cash and are introducing measures in the financial service and markets to protect retail access and support wholesale distribution service. However, it's essential to recognize that the inability to use cash in digital transactions, which are becoming increasingly important in daily life, can contribute to increased inequalities in accessibility. So what are the next steps for the Bank of England? The Bank of England believes that the digital pound may be necessary in the future, though no decision has been made yet. They are currently in the consultation stage, which you can also participate. I'll tell you more about it at the end of the video. They are moving from a research and exploration phase to the design phase, in which they will work closely with the private sector to develop the digital pound model. The design phase aims to reduce development lead times, determine the technology feasibility and investment needed, and create the detailed technology and operational architecture for the digital pound. It will also involve experimentation and proofs of concept in collaboration with private sector innovators. Upon completion of the design phase, the Bank of England and the government will decide whether to proceed with the building of the digital pound, considering the benefits and costs. And if approved, a prototype will be developed and tested before launching, ensure it meets high standards for security, resilience, and performance. If the digital pound goes ahead, it's hoped to be introduced after 2025. And here is where you come in. What do you think about the digital pound? Do you think it's a positive development? Or are you concerned about potential risks? Well, you are in time to have your say. The Bank of England is accepting feedback on their digital pound research until June 7, 2023. The questions are available in page 96 of the report. Here are some of them. Do you have comments on how the trends in payments may evolve and the opportunities and risks that may entail? Do you have any comments on how the proposition for the roles and responsibilities of private sector digital wallets are set out in the platform normally? Do you agree that the bank should not have access to users' personal data, but instead see anonymized transaction data and aggregated system-wide data for the running of the core ledger? So if you have an opinion on this exciting new development, make sure to let them know. Don't forget to share your thoughts and comments below. We want to hear from you too. Let us know your opinions and join in the conversation. And that's it for today's video on the digital pound. We hope we'll pique your curiosity and given you a taste of what's to come. Remember, this change could be introduced sooner than you expect, and it's up to us to stay informed and engaged. Until next time, stay curious and keep learning.